Yeah, we did see a slowdown in the IPO market earlier this year for a couple of reasons. One, there was the volatility at the end of the year, and then coupled with the government shutdown, we saw some companies, being held up a little bit. I do think we'll catch up and be on pace to where we were on track for before. So I think Q2 is going to be a really busy IPO quarter.
On track for what kind of number this year? And across all IPOs, some people thought it could cross 100 billion in 2019. Is that still on the cards?
I would say there are a lot of large companies out there that have been queued up and are ready to go. So if everything that is ready and waiting does actually come out to the market, we could see some big numbers.
I mean, already there's talk of an IPO bubble because of the so many companies that are in the pipeline now, getting ready to go public. Is there a concern that the more the floodgates open, you'll get less quality IPO with less pricing discipline than, say, a Levi's, what you saw today?
I think we're just seeing a little bit of a concentration of companies ready because of the slowdown in the first quarter. It's certainly not unsubstantiated, unreasonable levels for us to see. And I think that the companies that are coming out now are large companies with really well-established businesses and a lot of brand recognition, which is helpful too.
A lot of talk going on about dual share ownership structures. Do you think that actively hurts pricing, hurts demand, or because there's so many companies out there setting the precedent, like the Facebooks, that it doesn't matter anymore?
I think today was a perfect example, right? Levi's has a dual class structure, and the investor demand was really significant. It's up 30%, was priced above the range, and then opened even higher today. So investors are saying they believe in their long-term strategy. I think it's important to give companies some flexibility in the way they come to the public markets, because keep in mind, there are alternatives, and we want to see companies coming public and not staying private, and having that flexibility to be able to reward, the mechanisms that they want to use, I think is really important.
So do you not push companies on that point at all? You're really very happy for them to come along, withhold voting rights to the shareholders who are going to buy shares through your exchange?
I think it's important to recognize that while we talk a lot about dual class structures, the vast majority of companies that come to the market do not use a dual class voting right or weighted voting rights. Most of them are going more traditional with one share, one vote structures. That said, I have a higher principle that investors should have the right to choose, and investors should have the flexibility to choose to invest in a company like Levi's. And so if we take that right away from them by driving companies private, that's where I get concerned.
Do you have any concerns about demand for IPOs? I mean, there's so much now in the way of index funds and ETFs. Does that hurt potential demand?
I think the early signs that we're seeing, even given this environment, is that investors are eager to invest in these companies, and Levi's is a perfect example of that.
You mentioned that they have other options, and the private market has grown, the venture capital market, investing in companies like Lyft and Uber and Pinterest has grown massively over the last decade. Is that a concern for when they do come to list, particularly the companies like Lyft and Uber, that they've already grown a lot more than in the past how much they would have grown when they come to market? Less is on the table left for public market shareholders.
Timing is absolutely a downside for the everyday investor. If companies are having their fastest growth spurts earlier in their life cycle and they're still private during that time, we're not giving the everyday investor access to those opportunities. I think that's a real issue. I actually think it contributes to the bifurcation of wealth that we're seeing in the nation if the most dynamic companies are private. And we've created a structure where big companies and big investors have the most opportunities. That's a pendulum we need to see swing the other way so that more investors have access. But the public markets still provide a lot of value. And so we see companies recognizing that and wanting the liquidity, the currency, the discipline and governance that the public markets provide. They're all reasons why you see even big companies that don't need money, like Spotify was a great example of a company that didn't need to raise money but wanted to be public for the value that public markets give.
I mean, the next big one is Lyft. How big of a loss was that for you going over to the NASDAQ?
We focus on the companies that are coming here to the New York Stock Exchange and how we can support them. We're really excited about what's coming. We're excited about Levi's today. We're excited about what's in the pipeline.
You going to get Uber?
You know I'm not going to answer questions about specific companies.